following is a presentation of TFNN. The Global Market Pulse with your host, John Logan. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, John Logan.
Hi, guys. Welcome back to the show. And it's voting day here in the United States, in case you guys have been in a coma. That's something I partook in this morning. A lot of people standing in line. I mean, the voting booths opened here in North Carolina. I've got on my cold weather outfit here. Apologize for that because I just walked in. A lot of people standing in line already here in North Carolina. That was at 7 a.m. And it's going to be interesting, huh? I think we've got Steve Banger on with us. Steve, you there?
John, good morning. I'm here.
Hey, how's the weather in Chicago, buddy?
It looks to be a nice day. It was beautiful yesterday, 60s. Sunday it was in the 70s, but it's supposed to be a little bit colder today. But for Chicago, it's springtime. It's going to be like 55 or so it's great. It's a perfect day. I mean, it's November 8th, right? So
yeah,
it's perfect. I love it.
You see my little voting sticker? I don't know if you can see that.
I can. I'm
right
very
there.
proud of you. I will say that I will be going right after the show. There happens to be a voting station very close to where I live, so it's going to be in between me on here and the market opening.
Yeah, I just hope our ballots get processed properly. Hope there's no problems this year.
Oh, well, I mean, we run the whole thing off paper, right? So the worst which can happen is we're going to have some chats hanging. At least we won't have a Russian hacker taking control of the election.
Man. Well, listen, there's quite a few different things that can happen based on the outcomes. And I thought it would be nice, since you have this great worldly view of things and all the strategies and the permutations that can unfold based upon, different events happening. I thought it would be nice to kick around some concept. Like yesterday, for instance, what was the rally in the Dow? 400, something like that. I mean, the futures went crazy.
It took off like a rocket ship, yeah.
Yeah, and the VIX just came in like a freight train, and I expected actually not to happen on that level. But talking to you yesterday, for instance, you had kind of the other side of the coin there, that you think there actually might be some follow through. We were talking in the morning, and you were saying, well, I think this could possibly have a little bit more upside during the day, and I personally didn't see it. So you were right on that one. But what do you now that we're at this level? What do you think the trade is now? Is it worth buying lottery tickets on the VIX just in case something happens, kind of like the Brexit situation, or shorting the S&Ps, or what do you think is the possibility of the trade right now?
Well, so let's go back a couple of days. The last time I was on your show, which I think was sometime last week on Friday or so, or on Wednesday, can't remember. I did say that a Clinton win should generate about a 2% rally. I mean, that was kind of like the number I had in my head. And obviously, we got a 2% rally yesterday. So I think to some extent, a Clinton win is at this point baked into the cake. I think there might be another bounce if the Democrats sweep the Senate. But the point is, I think the upside from here on out for the next couple of days will be more limited than if the FBI wouldn't have come out and gave the green light to Hillary over the weekend. So I think the upside is limited. And the downside scenario, if you really want to play that and remain aggressive about it, is very much intact. I mean, part of the bigger picture I've been advocating for quite some time now is that I think the overall risk in the market is to the downside anyhow. So we got a very short-term, very aggressive rally. And typically speaking, if we are in, I don't want to call it a bear market, but if we are in a more bearish environment, rallies need to be sold. But I will say that that an election environment is not necessarily exercising sound judgment, because at the end of the day, it's a crap shot.
Right. Yeah, and I was I kind of have this Brexit thing in the back of my mind, and we've talked about this a lot, and how many extra points are there that aren't really factored in to the voting itself, based on deep convictions and people actually getting off their butt and voting, based on those convictions. And I was looking at, and again, we're talking about the premise of a Trump win, causing the market to, I guess, go down at least temporarily. And you saying that the Hillary win is kind of baked in the cake to some degree. Maybe there's a little more upside, but the Comey thing kind of eliminated some some indictments possibly, but not really necessarily all of them, if you know what I mean. I mean, they've got the Clinton Foundation thing hanging out there, and I tell you, Trey Gowdy and a couple of those other guys they're just not gonna stop. And if the Justice Department control, I mean, there's a lot of firewalls, I guess, that she's got around her. As far as, I mean, it's sad. I mean, that we have to explain this. And you just know that from here on out, Congress is going to investigate, right? I mean, they're going to be subpoenas and hearings, and it's not going to go away. I mean, if Clinton is going to be the president, it will be a perpetual crisis. Right, and I'm not advocating Democrats or Republicans right now. I'm just stating what I think are the facts. That you've got two different polar opposite factions that are not that happy with each other, and talking about where does this lie in the trading realm. I went to Real Clear Politics, and I looked at these maps, and I looked at toss-ups and things like that. I mean, she doesn't have, I mean, everything, all the toss-up states right now, and we're talking about how do you develop a strategy around this trading, Steve. I'm sorry to belabor the politics so much, but it is a factor in trying to maybe do a strategy that we're going to talk about in a second. I looked at all the toss-ups. I mean, margin of error is margin of error, and I think that's what people are forgetting right now. I mean, there is a huge possibility relative to what they think the possibility is of Trump winning this thing, and I don't see how, buying some lottery tickets on the downside or the upside on the markets or the upside on the VIX is really out of the realm of what you should be doing right now. But can we talk about that when we finish this break?
Sure. Yes.
Okay. Thanks. Great. Right. We'll be right back, folks.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. John takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi guys, welcome back to the show. Excuse the attire, just got back from the voting booth this morning. It was a little chilly, 34 degrees this morning, so still a little chilly myself. Steve, are you still with us?
I am. And
Great.
Supposedly my microphone is much better now.
God, you always sound good, but you sound even better now.
Right. It's because your technical genius in the background fixed something on my end.
Oh God. Hey, look, I'm going to give you a chance to speak here, but what I was getting at before, just to sum up everything that I was saying is, we always talk about, where's the edge and what is the good risk reward trade. I've got Real Clear Politics up on the screen right now. Mm-hmm. And when I was talking right before the break about toss-ups, there's 171 electoral votes supposedly in toss-up state right now. And that means that we're within the margin of error, and margin of error means margin of error. I mean, there's, so there's a really, and if you look at, you can go to why did this black out here? Okay, here we go. If you go to Real Clear Politics or just any site that's got these electoral maps, you kind of got the ones that are locked in or leaning here. And, you'll notice there's toss-up 171 electoral votes, and then you got 35 somewhat iffy ones leaning towards Clinton, and only 9 iffy ones leaning towards Trump Pence. So again, going back to trading, I'm not advocating Republicans or Democrats here. But maybe I'm wrong, but in my mind, Steve, I want you to take it from here. Why wouldn't you go in and buy some lottery tickets, on the VIX or the S&Ps if you know that anything headed towards a Trump win market's not going to like. Therefore, that trade may work out well. So I'd like for you to take it from here.
Yeah. So I look at CNN, right? And right now, CNN, when you go to the electoral map, gives Clinton a 91% chance to win the election. And I think the 91% chance CNN assigns to Clinton probability of winning the election kind of like corresponds with what's actually going on in the market. I think the market has very much come to terms with the perceived fact that Clinton is going to win the presidency. So I think the market in general is mispriced as to the possibility of a Trump win. Consequently, buying calls on VIX or straight S&P puts, I think represent a very significant opportunity to make money if Trump wins.
I'm with you.
So I think as far as the pricing is concerned, I think there's a mispricing in the market as to what the potential outcome is. As to the potential of Trump winning, I just want to mention one thing because you showed real clear politics. Being German, I look at some German newspapers, right?
Okay.
And I look at what I like to call a modern newspaper on a daily basis. And the Germans, they love to talk about US politics. In the German newspaper, they currently call the election 268-272 for Clinton.
Okay.
4 vote difference.
Yeah,
That is what they project.
Let me show that.
So, I mean, I think it's much closer than what some people realize.
Yeah, let me pull up the map. That's interesting you said that. Here's exactly what you were saying, I think, because if you take out the toss-ups and you just let's just say the polls are absolutely correct. So those toss-up states, whether they're 1% leaning towards Trump or 0.1% leaning towards Clinton, I weighted these, and you can do this on the again, a couple of different sites. Probably Real Clear Politics is pretty easy to use, but if you go that route, this is right now how the end should be if the polls are correct, and that's pretty scary to be that baked in the cake. CNN. I think somebody in the den was saying it was a Clinton news network, but they may be a little overzealous towards that percentage, just trying to get people to give up maybe on the Republican side. But yeah, those numbers you just stated, here they are. And here's a non-weighted, non-toss-up type scenario. And any one state that Clinton loses is a Trump victory for the presidency, based on what you just said. And some of these states could be flipped, so it's...
And I think that is actually the scenario, right? I mean, you have this segment of the population who might be motivated for the first time to go to the election booth in, let's say, 20, 30 years. And they're not part of the poll numbers because every poll, for the most part, is only being conducted up on likely voters or past voting behavior. So anybody who hasn't voted is not part of the polls usually. Consequently, if those people come in and start voting, all bets are off because you only need a 3% change of the electorate of people coming in who are pro-Trump and haven't voted in the past, who are not being picked up by some of the polls, to swing 1 or 2 of those Democratic states. And I think that is basically Clinton's risk, and that is where the potential opportunity is if you want to play it this way. And I don't think it's an uneducated guess at all, actually. I mean, I'm not advocating to bet on an election. I think that it's not the sound strategy.
Right.
But I personally, I have a lot of volatility calls right now. I mean, not a lot, but I have a lot in terms of the potential reward, what's going to happen if Trump wins. And I think it's not a bad trade because it's one of those 10-to-1 trades.
Exactly. That's what the point is here. And, if you go back to Brexit, what was that, about an 8-point flip that ended up happening there relative to what and they pulled the heck out of that thing beforehand, but they didn't factor in, like that 3% thing you were talking about with, people actually voting that didn't vote before.
People came in who were not on the radar, and that is what kind of flipped the thing on its head. And I don't think it's completely off the charts to expect something like that in 1 or 2 states which are currently in the Democratic camp.
Right. So let's go back to, I guess, the premise of the TFNN network, which is how do you make money with some of the information that is talked about on some of these shows. What would be, I mean, is there any mitigate a way to mitigate any type of, putting the kind of lottery ticket trade on, or is it just flat out take a shot on a very simple thing like long VIX calls or something like that?
So I think you can buy straight calls
if you're going to use if you're going to trade
Friday or next Friday, yeah.
If you're going to trade the election here, and I know you don't advocate that as a long-term strategy.
I think that's one thing to do, right? And that should provide some excitement. Another way to do it is actually sell puts in volatility, because they're rather expensive right now, and buy some calls. That's going to offset your premium cost. And I think that is a strategy which should work.
Got it. Hey, look, we got to take a break. If you can hang out, that's great. If you can't, I understand. But thanks for joining us either way. Okay. Thanks, Steve. Okay, bye.
Bye-bye, John.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi, guys. Welcome back to the show. Do we still have Steve with us? If not, it's okay. We can start going through some of the things we normally go through. Okay, good. We don't. That's fine. So here's the VIX, and here's the VIX this morning. So, yesterday I actually thought we'd kind of hang around a little bit higher on this particular product. That didn't work out. I actually got stopped out of that VIX trade a little bit and stopped out of the S&Ps. I didn't think we were going to rally that hard. But we've gotten really close to these weekly unfair highs, backed off a little bit. I don't think anything really matters right now except poll numbers in the short term on the S&Ps. And like a lot of things Steve was saying, it's like you always try to define, can you get a lot of bang for your buck by taking on a small amount of risk? And I think, Steve, are you back?
Yes, I am.
Great. Yeah, I was trying to continue for you there, but I'd love to, you were talking about, kind of the CNN 10% chance, and, you were talking about a volatility strategy there. If you could continue with that, that'd be awesome.
Yeah, I mean, what you just looking at the chart, right? I mean, if you think about, let's say you have $100,000 worth of stocks, and worst case scenario, Trump comes in, and you're basically gonna blow a 7-8% hole into your portfolio. I would say that $1,000 investment.
I'm sorry, that's a blunt way of putting it. Go ahead.
Right, but I mean, I would say that $1,000 investment is going to make up that $7,000 to $8,000 hole, if that were to happen. Conversely, if Clinton comes in and the market jumps another 1 or 2%, or what you have done is you have basically given up a portion of those gains, and or given up all of the gains, I think, in the worst case scenario. So in other words, that 1% of your portfolio you put into VXX calls right now can be one hell of a life insurance. And I think that's the opportunity.
That's a cheap insurance policy, no matter how you look at it. And it gives you, I mean, you kind of watch whatever unfolds tonight, not sitting on the edge of your seat. You're just kind of, okay, well, I'm prepared. And who knows what's going to happen. I mean, if she wins, you and I have talked about this a lot, actually, off the air, but I don't see a ton of just follow through upside. I think go ahead.
Yeah, I mean, another interesting fact is that the post-election week in U.S. presidential election is actually one of the weakest weeks there is in the stock market. I'm trying to remember the actual percentage number. I want to say, I think the average loss post-election is about 1.6%, within 10 days after a presidential election. So it's known to be a weak seasonal week.
Right. So playing around with the S&Ps relative to the VIX, you think the energy is just going to be hedging with the VIX instead of trying to do some simple or complicated S&P strategy? Is that fair to say?
I just prefer the VIX because it's a little bit more volatile and you get bigger leverage when you're right. But the same concept is applicable for the S&Ps. If you look at the S&P right now, you're like, let's say 2120, give or take it. I think you can easily get down, if Trump wins, to 2050, perhaps 2000 in the S&Ps. Well, I mean, it's a 5-6% move. I mean, we were at 2080 yesterday or 2 days ago. So breaking through that low and taking on another 2 or 3%, I don't think it's unreasonable. I really don't. Right. So, and if that's the case, you buy some cheap out of the money puts for Friday. If the market blows through, you're going to look golden.
Plus you throw in a couple of riots in Chicago, LA, and Seattle or something like that. Then it might even go farther.
Right, but the way things are going to Chicago, John, we don't have many people left to riot with because they can just shoot themselves.
That's true.
It's just a mess over here. It really is.
Plus, it might be too cold to riot. Who knows?
Well, Chicago's not used to it. But just to get back to the actual trade setup, and I haven't looked S&P prices, but just to give your viewers one idea, you can sell right now VXX $28 puts and collect, let's see here, 28. Let's say 20.5, and you collect about, let's say, between $16 to $21 per option. And the market should really, like even with the Clinton win, the market should.
You're talking about VXX?
Yes, VXX level.
VXX. Okay, VXX. Okay.
and you take the same $21 and put them to VXX calls, which are quite a bit out of the money. But it's a no money down trade. You should not get assigned to the put option no matter what, because it's significantly out of the money. But in the event of a Trump win, it's going to make some serious cash. And it's
serious.
Serious. I mean, I think it's one of those trades which can be whatever, 7, 8, 10 to 1. And the actual capital at risk from like an outlay is 0 if you take yesterday's closing prices. And I don't think there's any chance you're going to get assigned to the puts. I mean, there's always a chance, but I think it would take an act of God on the upside to actually get assigned on the puts.
Right.
And that is where the loss scenario is. So it's a setup where you can actually potentially generate significant alpha without really having to put any money on the table.
Yeah, just to throw some gas on this, I was talking to, people that in my wildest dreams would never be following the U.S. election. I was talking to one of our programmers this morning. I don't know if you know him, Jay, in the middle of nowhere in the Philippines, literally. And I was talking about something. He goes, "Hey, are you guys ready for the election? We're all watching." And I'm like, man, I mean, every single person on the globe is watching this thing, including Jay. Yeah. And that means that, world markets are just going to fly off the handle, which is going to also, I mean, every single person is looking at this thing on the planet. And that means that VIX situation will be magnified, just because it's not just, there's some crazy thing going on in the U.S. and they'll figure it out. Yes. Everyone will react.
You're so right, because the same thing is happening with my German friends and relatives. They actually are really interested who is going to become the next president. And Trump is to them like a loose cannon. It's kind of like the cowboy back in the Oval Office, right? It's like Reagan on steroids to them. And if he pulls that thing off, there's going to be an international reaction on top of anything going on domestically. So I think you're absolutely right.
I know. All right, Steve, thanks for coming on one more segment. It was awesome to have you today. Great input as usual. And I'm sure I'll talk to you later.
Well, it was my honor as always to be here, John.
Thanks, Steve Banger. Okay, guys, We'll be right back.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Hi guys, welcome back to the show. We had Steve Banger on earlier. We were really talking about the leveraged possibilities of what's going on with the pre-voting numbers as far as it leaning one way, and really knowing a defined reaction to the market if that CNN 90% number isn't correct. You got a really good risk reward here, and like Steve said, there's a number of reasons to put this type of trade on. The risk reward, protect your portfolio. Again, this is a short-term blip on the screen. I think if Hillary wins, but if Trump wins, there's going to be some adjustment. Like we talked about at the last there, every single person on the planet is watching this because it's probably going to affect every single person on the planet. And that means that the dollar is kind of up in the air. You guys know, I mean, if you've been watching some of the comments, I mean, these things take a while to kind of, set in, but they're, the Clinton is stay the course situation. And Trump's going to get in there and bang things around and trade deals and what have you. I mean, those are things that are going to affect economies in general, not just our own. In the short term, maybe who knows? But I mean, it's an unknown, and that's kind of what the VIX is for. So I'm right with Steve on some of the comments that he made there. The S&Ps. Let's talk about some numbers here. The 240 numbers. This is our kind of short-term profile. 2130.75. I think we hit that to the tick this morning. What do we hit? 2130.25, and then the bottom number there is 2116.75. So that's your 240 range. Somebody had asked about that a little earlier. And as we look at these, big inflection points, 2133.55 is that weekly unfair high. Let's take a look at some dollar numbers here really quick. Kind of had another kind of move forward with the dollar this morning. Here's the numbers on the dollar that I think you probably should be paying attention to. You've got 97.97 really sitting there. New profile 2-day on the dollar. That is the upper part of the range, and the bottom. I don't think there's a bottom on this. If we really start getting some Trump decent numbers in, the 240 numbers, the shorter term on the dollar, 97.82 and 97.51. I think the political trade here is based on the VIX and not really looking at a lot of these other instruments. The crude trade, this is the December contract still. Got a new profile. We talked about this happening yesterday. The new numbers on crude right now, the big numbers, are 45.52. We're pretty much smack dab in the middle. 45.52 and 44.22 on the bottom. And that's the situation on crude. We just kind of got behind on doing some updates here. I'm going to fly through these. Gold, All right, so guess what? We came down and hit that 1278.5 yesterday, and kind of bounced a little bit here, reached a high of 1286 and a half or so, and we're right back down into that area. So this was the trading opportunity around that area, 1278.5, and again we hit it 1278.60. So hit it within 10 cents and popped up about $10, and now we're kind of back down sitting at it. Gold is going to really come unglued here either way. And I think you got to also take a look at possibly doing a strangle on this, a long strangle. Take a look at the volatility numbers on gold. I'm pretty sure they're high. If there's a way to do, if there's a way to do a long volatility play, and it's not too expensive, I think that's the way you look at it. But if the options are really, really pumped up here on gold, and I haven't looked at them this morning on a relative scale, selling, a credit spread up top and maybe selling a credit spread down below. What does that mean? That means, selling some, let's just pick some numbers here, selling some 1320s and maybe buying some 1330s, selling some 1260s and buying some 1250 puts, things, that type of mechanism. You'd at least capture some volatility, won't have a lot of risk there, and those things will more than likely collapse if Clinton wins. And you've got a high probability of that, of course, if you look at CNN's numbers. There's a lot of plays out there right now. There's capture volatility plays, and there's some buy the volatility plays, which Steve was talking about. All right. Let's take a look at a couple other things we normally look at. I just think you got to stay away from treasuries altogether right now. Been talking about that. Let's take a look at copper. And this thing continues to go north here. Joey had talked about that $2 floor on this. And this week, man, we have used 226 as a launching pad here. Talked about 230 being a stopping point here, but that thing is just not remotely slowing down. We actually kind of eclipsed it and kind of ramped up again based on that 230 area. So you should have some taken off in copper here. It's a smart thing to do. But of course, we crossed some borders on the weekly profiles here. And the last time we did that, getting above weekly profiles, February 2016, we really kept going. So it's not the time to short this. Let's take a look at the XLV. This is a sector that just completely caught on fire yesterday. We're going to have a new profile today in the XLV, so you're going to have to pay attention to that. Watch the scanner. Make sure you get the new numbers on that as they unfold today. Then you'll have some new areas to play defense and trade that based on some longer-term inflection points, which is going to be nice because the last time we had any new numbers in the XLV was about the middle of October. Financials. Kind of busted out here, hasn't closed above 1990. Think you got better things to put mental capital towards than the financials right now also. But let's take a look at a couple of internals on that one. See how the leaders did. It's kind of, buy the strong stocks and sell the weak ones. We've opened this week above 68.85 on JP Morgan, touched it, head higher. Again, this kind of proves the premise. Relative strength, relative weakness trading. Let's take a look at our buddy Wells Fargo just to verify that this thing's a piece of crap and probably heading lower. 45.09 printing this morning. So didn't really participate. As you can see, explored the whole fair auction on the the sell point without question was at 46.53. We talked about that, and the take some weight off was at 44.29.30 area. That happened last week. That was such a beautiful thing to witness. And now we're just kind of swimming around. This is not when you want to be long, folks. We'll be right back.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Catch Larry Pesavento, a 40-year veteran trader. He uses pattern recognition, Gartley's, butterflies, ABCs, and Fibonacci in order to trade these markets. Trade what you see. Next on TFNN.
Hi, guys. Welcome back to the show. Got about 4 minutes left. Just going to cover some bellwethers here. Apple this week. Loved the way this thing acted, and didn't exactly just kind of power up yesterday. Got a new profile attempting to appear yesterday on Apple. That means we're going to lock in a profile on the opening here. New inflection points on the daily. You got the scanner. You will know what that is. And taking a look at Facebook, still not a fan of buying Apple at all. I think you just got to look at, now that we've breached those weekly unfair highs, those are usually follow-throughs from the upside, and more than likely could explore the fair auction, and that would be down to 103.90 on the weekly. Let's take a look at Facebook. This was interesting yesterday to watch this not really recover that well. And here's your Facebook situation. So when you step back and look at the long-term of Facebook, the spine was broken. We had the weekly close below profiles, technical damage here. Now you've got 123.70 as a little bit of a lid on this particular product, and that's your focal point on Facebook. And you will have a new profile on Facebook today too. Amazon. Well, let me wait for this to come up here. Yeah, I mean, I think this one's a little bit less of a situation to pay attention to when you've got some other ripe opportunities. I think Amazon's a little bit of a crapshoot right now. Let's take a look at American Express. kind of poked its head back above the 66, 67 area here yesterday, but I'm not such a huge fan of buying this product right now. I'm going to leave that alone. Let's take a look at another stock that is a day trader's dream here. Tesla, closed lower than it opened yesterday. I think the writing's on the wall for this to make another leg down. Here's the 240s on Tesla, 194.11. You got 188.62. The short-term numbers down below, and I just don't see a lot of reasons to pile into this stock except on the short side. Okay, guys, we've got about a minute and a half left. We've covered a lot of kind of political probabilities this morning, if you missed the first part of the show, and that was covered not just to beat our chest about politics or which side was going to win. It was about probabilities and how some decent trades could unfold by looking at those probabilities and how do you attack that. And Steve Banger and I, if you missed the first part, we're talking about, the VIX is probably not only the insurance plan, but the short-term, a lot of bang for your buck on that based on some of the maps that we've looked at. And here's the Real Clear Politics again. This is literally with the poll numbers on a consolidated basis right now, 272 to 266. That is not a big spread, folks. And when you look down into these numbers, your vote counts. You look at in North Carolina, where I'm sitting right now, you got a point spread. Florida, you've got 0.2% spread on that one. So get out and vote today, guys. A lot of people have died for this country, for your right to do that as a citizen. I fully believe that that's your duty, and your vote does count, especially in this one. A lot of folks on the globe are watching what we're doing right now, and there'll definitely be some upheaval if some things don't work out the way they think these polls are accurately projecting right now. So take that for what it's worth. Guys, it's been great. Stay tuned for Larry, and have a good day, trade.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This is TFNN.